Hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody effing doing today? What's going on, everybody? All right, let's go. All right, let's see what's going on with the comment sections. Hey, those are some heavy bags. It's definitely gambling. How's everybody doing? Definitely a rookie mistake, my friend. You really think they're going to bring it up at 5.00? They got you right at 4.97. Right? All right, ladies and gentlemen, let's go. All right. So in this video, we're going to go ahead and talk about what the hell is going on with Opendoor. We're going to go ahead and give you a viewpoint that unfortunately is not being talked about right now, right? Again, when it comes to these things, a lot of people want more suckers. The more suckers they got, the more suckers they can offload to, right? And the point of our platform is to be able to take you from zero to multimillionaire, right? So that's pretty much what we're going to end up doing, right? The goal is to take you from nothing to getting on track to seeing how the multimillionaires be able to, live their life, right? And the whole point is getting into the understanding of what intrinsic value is. So for all the folks out there, we have a sale, coupon code SAS, $1,200 off. You'll get access to everything I'm about to show you right now, all the data, okay? All right, so Opendoor right now is up 42.67%. It was up 66% before falling down to a low of 39%. Year to date, it's up 100%. If you go to all the way to the bottom, from the bottom here, let me make sure I get the bottom correctly. Right there, it is up 500 and that doesn't seem right. Yeah, 529%. Technically, it's around 800% because the high was 497. It's because the high is no longer that. That's why it's like that, right? So there it is. Yeah, I know. What's it? Oh yeah, we're gonna see. Hey man, I have a legal team, so bring it on, buddy. I got a whole legal team ready, baby. All right, so yeah, Al, you got a bunch of haters back. Hey man, it's fine. You want to hate on someone who became a multimillionaire from homelessness? Go ahead and do that, right? At the end of the day, we're data driven, right? Very quickly though, Clover is about to come back online given all this crazy movement here. Year to date, we are down 2.19%. It's not moving like healthcare. Just understand that in the beginning of January, we were up 1.47 million in the earlier in the beginning of the year. And that's all regarding intrinsic value, right? That's our basically due diligence regarding intrinsic value and basically teaching folks how to go from zero to hero, right? And then what I've been doing on the other portfolio, so I can essentially teach, is be able to use around a $14 to $15 million portfolio to go in and do covered calls and cash secured puts to make $200,000 to $800,000 a month, right? And that is ultimately, and that's going to start my real estate ventures, right? And we're going to be teaching that from an educational perspective in our lifetime access. So lifetime access will go up. So definitely take advantage of the sale. Okay. All right. So now that we went ahead and talked about that, let's go ahead and talk about the problem here. Right. So, and here, listen, Pat, you're more than welcome to stay here, man. Again, it's all education. It's all education here. Okay. All right. So, this gentleman here was talking about how fundamentals don't matter. I've heard that many times. And then I referenced AMC, and this gentleman said, doesn't matter where the stock price for AMC is at, right? AMC skyrocketed and many of us banked. The problem is AMC did skyrocket, but not a lot of people banked actually. The people that sold the bag up at top are the ones that banked, and many people that got stuck holding the bag, they end up losing. So the point is that I show you this, guys, is that you have people that like to edge you on to buy more. But remember, a lot of these people are not your friends, right? Rule number one in business, trust nobody, right? You can't trust nobody, guys, right? And the problem is when you have somebody edging you on, you don't know if they bought lower than you. And what they're trying to do is they're trying to get you to go in and buy higher so they can offload their position to you. All right. So yesterday we went ahead and posted our due diligence. regarding the quantitative analysis of institutional trading patterns. We went ahead and analyzed 591 institutional transactions from SEC 13F filings. We use a lot of complicated math, as you can see here. Let me show you. We use a lot of complicated math to basically figure out at what levels will institutions try to dump on retail investors, right? Now, I'm not going to be showing you the Clover one because that's, that's going to be accessible only to lifetime access members, but it completely looks different than this. It is a completely different picture because institutions are doubling down. And what this will tell you, and also for the Clover document, it tells you when it's a good time to sell or do covered calls. Why? Because you're able to know exactly when institutions want to offload their junk, right? So there's that, okay? We're going to be mentioning this soon, but the big thing here that we want to talk about is the trading volume. So today on the daily, we had 1.8 billion shares traded. 1.8 billion shares traded, right? Now, the problem is when I say 1.8 billion, a lot of folks are like, what does that mean? Al, I don't know what that means. And the problem is, a lot of folks that are retail investors don't understand kind of how this works. So I'm just going to go ahead and say, I'm going to actually ask ChatGPT for this. Maybe it can help construct it for me. Hey, man, I need your help here. I want you to create me or find me a square that's filled in with multiple squares of the same size. This will be purposeful for our discussion. So let's see, maybe. Yeah, man. Can you just go ahead and generate that for me, please? So yeah, let's see if we can just kind of generate it. So this thing's generating right now. So hopefully it generates it quick. But the point of me making this right now, as it's basically thinking, is I'm going to go ahead and give you a bunch of squares. Okay. And hopefully it does it correctly. It doesn't give me some like clown work. But think of oh yeah, that's gold right there, guys. Oh yeah, baby. That's what I'm talking about. All right. So let's say this big box represents one company, right? And let's call this company Opendoor, okay? And let's say each of this box is a share, okay? So how many shares are here? What is the shares outstanding? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's about 25 shares. So let's say this company is filled with 25 shares, okay? Now, what happens if I have a company that has 25 shares, and let's say the volume was, let's say, 200 shares. Well, obviously, you have people playing hot potato and passing around shares back and forth. Now, I could connect my iPad, and we can have an iPad discussion. I think this will be very helpful, but you can ultimately, you see where I'm getting at here. So I'm going to explain. The problem is you ask a normal retail investor, you ask them, oh, by the way, I'll be getting to this. Predictions are tough, but I'll be getting to it, right? But, if I was to ask the audience, how many outstanding shares does Opendoor have? I would say maybe 20% would probably be able to answer the question correctly. I would say 80% are going to be like, I don't give a hell. This thing's going to go to the moon, suck on a bag of these nuts, right? That's probably most. I mean, the reason why I say that, guys, is because somebody said that to me. Let me see where I was going to tell him. This. Some guy said that to me. I posted this, by the way, this analysis here, and within literally minutes, it got 16,000 views, and our intrinsic value got 21,000. It's insane right now, the volume that's happening here. So this guy here, you can see what he said. I mean, holy moly, man. I'm just gonna go ahead and I'm gonna give it a like. You know what I mean? That's good, man. That's some good stuff right there. Okay, so crazy, man. So I'm just gonna give it a like, right? So that's good. That's crazy, man. All right. So the question is, how many outstanding shares does Opendoor have? Now, we could go ahead and do it this way, right? But we'll go this is more accurate. So we'll do open here. And if you look at the outstanding shares, you can see it here, 729.13, right? You read that, right? Yeah. Did you write that or did you read that? Right? I liked it. So there you go. right? I like it. Keep writing stuff like that. It's fun. All right, but anyway, so 729 million shares, guys. Okay, so how many shares did I tell you was traded? About, as of right now, 1.8 billion. So you're telling me that, if we take 729 times 2, that's 1.4 billion. So more than double the volume of shares has been traded for Opendoor. Now, what does that mean? Right? So let me go in again. People don't understand the mechanics of the stock market. They just see the stock price go up. I'm trying to give you X-ray vision so you can see more than the other retail investor, because unfortunately, again, the people that have knowledge are going to be the ones that are going to pass on the back to but again, I don't like to invest this way because it's like the Hunger Games, right? There's a better way to invest. All right. So, okay. So let me show you. Let me show you this post. Okay. So let's break this down. All right. Let me drink some coffee. All right. So dear open investors. Okay. It's all educational content, right? So definitely, if you like this video, give it a like, subscribe. And again, guys, we have no sponsors. This is all from Al Stock Trades. The whole point of this is to be able to teach retail investors how to get a fair shake on Wall Street. I came from nothing. I started from homelessness, guys, okay? I started from absolutely nothing. You can Google who I am. I started from nothing, okay? And I got tired of the system. I got tired of Main Street investors getting fucked over by the rich, all right? I'm fighting for the little guy, right? I'm fighting for you, right? Our politicians are crap. They're bought out by hedge funds. Our hedge funds are crap because they don't care about you, right? Oh, yeah, that dinner was good, but that dinner was bomb. I finished that quick. I like the salmon over the lamb, though. Or not the salmon, the sea bass. Yeah, dude. I gotta show you the pictures. Okay. Yeah, for everyone's watching. So, all right. So let's read this. So let's see what's going on. Okay. So Opendoor has approximately 729.13 million shares outstanding. That means just over 729 million shares actually exist and are held by investors, whether it's retail, institutions, insiders, et cetera, et cetera. However, in a single recent trading session, just literally one day, we saw 1.66 billion. Actually, I wrote this like an hour ago. It's actually 1.8 billion, 1.85 billion. All right. So these are the shares that traded. So in plain terms, the entire share count turned over more than twice in one day. So how is this possible? Right? So trading volume counts how many shares change hands. So not how many shares actually exist, right? So if a single share is bought and sold multiple times in a day, each trade adds to the volume, right? So think of it like a game of hot potato. One trader passes the share to another, who quickly passes it again and again. And the share might be flipped a dozen of times in a single session, especially in a frenzy like this. Okay. So this is why when I tell you guys, when there's $7 trillion sitting on the sidelines for money market funds that are going to get slammed into the stock market, there is people out there that were commenting on Bill Ackman's post, and they were pretty much basically saying, the market's like set 35 trillion or whatever. If we, or 50, 35 to 60 trillion, if we put in 7 trillion, it's only going to raise it up by 7 trillion. No, that's bullshit. That's not right, guys. That's not right. Let me explain to you. Okay. If let's say right now, I am trying to buy Open right now, right? And it's trading at, let's say, $4, right? I know it's trading like $3, but let's make it 4. It's trading at $4. Okay. And let's say I want to buy it at $4.50. All of a sudden, as soon as I buy it at $4.50, everyone's prices change to $4.50. Then I take it at $4.50. Someone says, oh my God, it's going up. I'm going to go ahead and then I'm going to sell it to a guy at $4.80, right? And then it goes up to $5. I'm like, man, I want it back. Here, I'll give you $5.20 for it. And you see how it just continues going, it goes up like that. But here's the thing. What's actually happening here? You're playing a game of hot potato. Okay. And you're just passing the buck back and forth, and actually not, how do I say this? It only takes a little bit of capital to raise a stock price that high because of just a mere group of people passing it along each other. That represents the whole factor. The issue is when it becomes large like this, institutions like to take advantage of retail investors. Now, again, unfortunately, the people that I'm trying to help are telling me to suck on a bag of you know what, but it's okay. It's fine, right? I will suck all the bags of you know what just so I can help one person. Okay, that's fine, right? That's fine, right? We're LGBTQ friendly here, guys. Okay, that's totally fine. There's no problem. All right, we're an educational platform. Okay, so with that said, right? Opendoor stock price ran from 51 cents to a high of $4.97. That's around an 800% move, right? So despite the company still being unprofitable, right? And just today, we saw 26.4 million shares traded in a single minute, which took the stock price collapsing from $4.60 to $2.79 in real time. That kind of price action doesn't come from a long-term investor. It comes from fast-moving speculation and algorithmic selling, which is the same algorithmic selling that I was telling you about, the high risk regarding all the mathematical computations that I was telling you. Again, guys, everything I do is by math, okay? So let me show you the trading volume in the minute. So if you look at that minute volume here, if you zoom in, here's the trading. Within 1 minute, 26.48 million shares were sold. And it was a heavy candlestick that went all the way from $4.30 down to $3.40, all the way down to $2.79. Okay, and now slightly getting rejected from the 50 MA. We don't really care for day traders for the minute chart, unless you're ultra fast. I like to use the 30-minute, but there's a lot. Sometimes you got to break it. So it is somewhat bouncing on that 200-day on that 30-minute. So there's that, right? Could the setup for another rally? Again, very difficult to say, right? Given that now we secured a very strong top here, strong levels of resistance, and potentially now institutions are going to take the standard to two standard deviation approach to try to sell, unless retail tries to gobble it up, right? So there's this minute candle. Now, someone said, I saw it's the next Carvana. So let me show you something, okay? Because we're an educational platform, okay? So I'm going to go ahead and I'm going to pull up Carvana, okay? And someone said this. Someone said, Al, you use 2023 numbers. Can you use 2022 numbers? Because, Carvana in 2022 was actually, in 2022, it was actually $4.74. So can you show me how you can make your own price target? So someone asked me this. Can you show me how you can make your own price target from $4? Like, how do you do that? Again, all I'm going to use is the revenue. The net income is negative, and then I'm going to use the free cash flow, which is negative. So I'm going to use the shares. Okay. I'm just highlighting these. So what I'm going to do is I'm going to take a screenshot of Carvana, but I'm going to stop at 2022. I'm not going to use 2023 numbers, and I'm not going to use 2024 numbers. I'm going to just use 2022 numbers. So I'm going to go ahead and take a screenshot. Okay. And by the way, so it's fine. We'll do this first. Okay. So this is just 2022 numbers. So I'm going to calculate the price target of Carvana, and we're going to pretend like we're back in 2022. President Biden's still in office. Federal Reserve was hiking. Market was bad. Carvana was $4.74. We're going to go ahead and show you how you can set your own price target utilizing the same software that hedge funds use. Okay, and I'm going to use these numbers to give a price target. These price targets are not going to come from anywhere else but these numbers. So let me show you. So I'm going to go ahead, take these two things, and now I'm going to open up this. I'm going to type in Carvana, but this time I'm going to zero out the automation that we have here, and I'm going to input the reality here. So I'm going to put 0, 0, 0, and I'm going to put the stock price, which was Carvana stock price was it $4.05? Yeah, so $4.05. You see Carvana, $4.05. So I'll put the stock price here, $4.05. I'm going to hit enter. Okay, fine. You can't put 0. I'll put 1. I'll put a bunch of 1s so you can see it's zeroed out. I do that. I put classics view and it shows you, well, it's 1 share. So that's fine. I'm using 1 share. It's technically not correct, but you could see $4, $11. This means nothing, right? These numbers are all wrong. I'm just showing you. I'm about to show you the value of Carvana using 2022 numbers, right? Right. And then thanks for saving my life financially. And, it's one of our members, right? And again, this is some crazy shit I'm about to show you. Okay. So people are saying Carvana. Let me show you Carvana. All right. So now we're going to use 2022 numbers. Okay. We don't know 2023. We don't know 2024. I'm going to just show you that. So to do that, the first thing I like to do, since free cash flow is negative 1.8 billion, these numbers are in millions, right? So there's 1,000 millions and 1 billion, right? And we teach this, right? Because they never taught you how to understand these numbers because they never expected, the school system, your politicians never expected you'll ever get to that level. But yes, you can. You can become a multimillionaire. Yes, you can, right? And I can teach you. All right. So here's the revenue. We'll use the 2022 revenue. Okay.
13,604.
We'll use a conservative estimate. We'll multiply it by 5%. I've analyzed over a lot of companies, and a good minimum, if you believe the company will generate future free cash flow, you can use 5%. That's about 680 million.
680.2.
I'm going to put this right here. So I'm going to put that number right there. See? So this box is done. Now I'm going to put the outstanding shares. The outstanding shares is easy. All I got to go here is shares. Our software gives it to you. It's 100.83. So I'll put it here, 100.83. But now I have to calculate the growth rate. I already put the stock price in, right? The stock price was $4.05. Now I'm going to put the growth rate. Now, how do you calculate the growth rate? Now, you can do a couple things. I'm going to take 2020 and 2022. It seems like a very long growth rate, but I'm going to go ahead and do that, and then I'm going to be conservative because it's always good to be conservative. So I'm going to take 5586.56.
5,586.56.
I'm going to put it here to calculate the CAGR calculation. I'm going to put 2020. I'm going to go back to the financial sheet. Again, all part of Al Stock Trades, our proprietary data here. We're going to go ahead and do 2022.
13,604.
We're going to put this here. So 13.6 billion, and we're going to calculate the CAGR. The CAGR is 56.05%. Now I'm going to go ahead. I'm going to take 56.05%. I'm going to divide by 2 just to be conservative. Imagine if their revenue got cut in half. By doing that, I get a growth rate of 28.025%. I take this now and I hit and I paste. Are you ready? I'm about to hit enter. Okay, remember, I'm about to blow your mind right now. I'm about to blow your mind. Ladies and gentlemen, on December 23rd, 2022, when Carvana was trading at $4.05, if you utilized our software, and if you have done this methodology, and you hit enter, looking at only 2022 data, you would get a price target of a recession case of $138.85, all the way up to a best case of $562.87, with a base case of $385 motherfucking dollars. All from a stock price of $4.05. That's a 9,000+% return. That is the power of the intrinsic value calculation. This is the level of sophistication that the hedge funds have. How do you think I became a multimillionaire? I designed this. No, actually, first I was doing it all by hand, right? And then I designed the software, and then I'm sharing it with all you guys. You can see it right there. And you can play this video until your freaking eyes bleed out, right? And you could go ahead and look at our case study in the next 2 to 3 years, okay? So $385. So now what is Carvana trading at? Look at this cookie. $341. Look at this. $364 is the high. And what did I say is the price target for the best case? $385. Isn't that right next to it? And we took this, price target from 2022's numbers. This is 2022's numbers. So you see the power of this? So when somebody comes at me and tells me Carvana, I'm like, bro, I know the math really well. I've done the math, right? Now, there is an instance, I did 5% of the revenue, but the gross margins for Open is only around 8 to 9%. They got to show me, maybe I can do more than 5%. But you can see the power of the methodologies of the intrinsic value calculation. So I did the same methodologies in yesterday's video. I recommend watching it. I'm not going to do it again. And I calculated the price target, which you can see here on my main Twitter page. You could go ahead, follow us here, and you can see our due diligence. Okay? I went ahead and did the price target, and I did 2 intrinsic values yesterday. And I got a recession case for Opendoor anywhere between $2.81 to $8.70 at an 11% growth rate. And I got a buller case price target projection from $4.35 to $15.53. Okay? And you can see it stopped right at the bear case at around $4.90. The point is if there was a business turnaround, right? If this was a business turnaround, this is what I'm expecting the price will be. Okay? Unless they show me otherwise that their gross margins can be higher. So yes, could there be value for Opendoor? Yes. But the thing is, given how the stock price rose, you're no longer buying Opendoor anymore. You're potentially buying a pump, because I said that 1.8 billion shares were traded all in one day. And there's only 700 million shares on average, 750, whatever. What do we say? 729 million shares on average. So when you're buying it right now, you're buying it from someone who's keeps selling it and going, you're buying hot potato right now, right? And you also have institutional investors breathing down your neck, given the mathematical model we showed you, that you see how the selling pressure increased to 34%. And once you get higher, holy shit is the selling pressure. 12 to 14, they will unload like crazy. 8 to 10, they will unload like crazy. And this is the confidence interval, and it's the p-value for all my scientists out there, less than 0.001, all the way to 0.05. So you see what I'm saying? Again, we're all mathematics here, guys. I'm teaching you what the hedge funds do. And then it's literally, I give access to this data. You can use the software right now from your phone, from your computer, from anywhere around the world. You can use the software. And guess what? We got access to over 60 stock markets in the whole world. And the members that joined now have a combined total net worth of $45 million with a 30% response rate. So again, if you actually want to learn how the stock market works, and if you want to become a multimillionaire like all of us, you need to understand how it's like. You have to understand wax on and wax off. You have to understand the basics. And when you understand the basics, you'll understand and you'll have access to all this. You'll be a master. You'll literally be ahead of more than 95 to 98% of all of America when it comes to finance. Okay? So coupon code SAS, it's not going to last long. Take advantage of this. Break out of the matrix. I went from nothing to becoming a multimillionaire, and I believe you can do it too. Okay? So let's go ahead and let's move forward. So trading volume count. Okay, so we already talked about the hot potato. So now let's go ahead. Opendoor stock price ran. Okay, we talked about this, didn't we? Okay, we talked about this. Yeah, and then guess what? You got 26.4 million shares traded in a single minute. That's insane. Okay, who is that? Who is that? Who could that be? And it could be institutions. In fact, if you go ahead and if you go to Mr. Finney here and you go open, okay, you can see some institutions sold today. You got these institutions that filed today, potentially may have sold. You see that? So again, you're going to get institutional selling pressure. Okay, so yesterday we published a proprietary institutional analysis that revealed a concerning pattern. Institutions, which is this, I published this, right? And you could see how there's a lot of buying, but all of a sudden the buying stops after 5. You see how I showed you this yesterday, right? I said the buying stops after 5, and then all of a sudden the selling starts. You see how it's mathematically modeled? You could see how there's a lot of buying here, but then the buys which are in blue, you can see in blue, they start to disperse. It's not as strong. How do I get this data? Every person who has over $100 million have to submit something to the SEC. I take that data, I process it, and I run a whole bunch of computational mathematical modeling sequences, and I find that they bought at around these levels, and it starts to become weak after 5. Okay, but then all of a sudden you start to get this dense selling around 5, huge selling, and what did you see here? Huge selling around 5, just huge selling. Okay, again, guys, it's all math. Guys, listen. You can put your whole life savings in this. I don't care, right? All right, I'm not doing that because I care about my future. But at the end of the day, all I'm trying to do is I'm trying to educate. That's all I'm trying to do. Okay, I don't want you guys to get stuck holding this back. Okay, I don't want Wall Street to F you. Okay, because trust me, they will leave you on the side of the road with your family with no money. These people don't give a shit about you. These people are nasty people. It's like the devil is whispering in their ear. These people are freaking nasty people. They're very disgusting. Okay. All right. So now that we talked about this, so we reviewed 591 institutional transactions and found that many of the largest players are not taking profits. They are cutting losses, right? Which is interesting. They're cutting losses. Our model showed that institutions are selling in coordinated bands with selling activity happening between $13 to $14 and a significant activity happening in the $3 to $4 range. Okay. This is not random behavior. It is defensive selling, a strategy to quickly exit risk positions while retail excitement drives prices higher. So the data is clear. Institutions like Renaissance Technologies, Morgan Stanley, Goldman Sachs have liquidated over 35 million shares. And our analysis estimated over 23 million shares are set to sell into the rally. That's what the prediction model is showing. So that's more than 8 days worth of average volume. Retail buying can't absorb that. So what's going to end up happening is this is how you get these huge negative down candles. It's most likely institutions offloading to retail. And most likely they're probably buying, thinking they're buying the dip. And they buy. And then you get a whole avalanche of selling. And they try to raise it up. And then they dump it on you again. So let me see here. What else? So we could talk about the LAR, liquidation absorption ratio. Again, it's all math here, okay? So here's the mathematical model. Here's the price target that we did. Crazy, 12.6 thousand views here. And then this thing got 23,000, which is insane. So I'm happy that our research is hopefully helping some people, right? And that's all it is, guys. Take it as a grain of salt, right? If you want me to choke on a bag of, you know what? That's fine, dude, okay? If I can help one person, then I've done my job, right? I think I've done a good job, right? Because you can't take nothing with you in the world. So the best thing that makes sense is being able to help, your a neighbor comrade, right? That's why in the Bible it says honor thy neighbor, right? Okay, so we talked about this. Okay, we talked about that. Oh, good. Okay, so now let's transition real quick. So we showed you Carvana. We showed you the potential price target of Opendoor if they turn stuff around. So now let's go ahead and switch directions to chamath, Mr. Chamath, palihapitiya, SoFi, Open, and Clover. Okay, so because of this here, let me give me a moment here. Let me drink some coffee, please. I need some freaking coffee. Appreciate you, C's greatness. Appreciate you, buddy. Sorry, I'm not keeping up on the chat, guys. I'm really sorry. I'm gonna try to. I'm sorry. I'm so passionate and I'm laser focused on this, so I just get a little bit right. I'm very passionate about this here. Okay, I just really, I hear a little passionate here. Okay, so sorry if I don't follow on the chat here. Okay, guys. Okay. What are we gonna talk about? All right. So today, well, first off, let me show this. Okay, so for Clover Health, this is called like ape ranking, or I don't know. Somebody help me. Somebody posted it on the stock terminal. It's something with apes, and it ranks all the apes and something like this. Okay, but anywho, the point is Clover jumped from 632. Yes, please start from the beginning. If you're watching now, you're doing yourself ape wisdom. Thank you, freaking man. Thank you so much. Okay, it's called ape wisdom, right? So start from the beginning. Okay, definitely take. Please, you'll be able to learn a lot. Okay, so ape wisdom. Okay, ape wisdom. Yes. So you could see that Clover jumped in the interest range of 632. I talked about this today. Can you please turn that up? Hold on, guys. I talked about that today because early on in our community, because it literally 10x'd in interest. So why is that? Listen, guys, this is not rocket science. All right, let me go ahead and let me put this here. Okay. I talked to you about SoFi. I said that, look at SoFi. SoFi now is $23.39 billion. If Clover had the same, it would be around over a $40 stock. We're getting now SoFi approaching near all-time highs. Okay. So SoFi turned back on. Okay. You have Bitcoin going all-time highs, which then caused S&P 500 to do all-time highs. I talked about how Ethereum, just like how Bitcoin is a precursor, like a predictor of S&P 500, I talked about how Ethereum could be a predictor of the small caps. And now look at the Ethereum price. Ethereum price. And now you can sorry, this lady's talking. Hold on. Okay, so the lady stopped talking. You can see Ethereum now is nearing all-time highs. What this basically tells me, and you can see here, it's getting to all-time highs, right? So what you can see here, guys, is we're getting to a point now where we are seeing a lot of day traders. And also, again, I cannot share with you the data for Clover. I have millions of dollars in this. I can't because this data is proprietary and it's for our lifetime access members. That's what I'm saying. Take advantage before you get priced out of it, because this thing is going to rise to 5, 10, 15, 20 grand for lifetime access, right? This looks completely different for Clover. You're seeing institutional buying like crazy, okay? And what's happening is now institutions now are not stupid. Institutions saw SoFi, right? And now they're seeing Open having like just a crazy erectile direction here, right? So what's next? What's happening right now? You're getting a mean reversion of the SPACs, right? You're getting a mean reversion of the SPACs. So what's going to happen is now you're going to get a front loading of Clover to trade, I believe, beyond its expected future beyond its current free cash flow. And once Clover hits profitability, and I think they might hit profitability this year, but given that I know for let me put it this way. I'm 90% sure they're going to be profitable next year in 2026. I'm about 60% sure they're going to be profitable this year. My math shows that they are going to be profitable this year. That's what my math is showing. But I'm just projecting Q1 data from 2024 to 2025 and projecting it from Q2 2024 to 2025 and beyond, right? So whenever you start seeing this, you're going to get you already see institutions buying. And I told you this. Let me repeat. I showed you this graph here. This graph is proprietary from our software. Let me just show you again, because again, this is an educational platform, right? It's fine. If I can teach one person and help change one life, then that is a job well done, right? So if we go ahead and look at this, and then you look at, let's just zoom in here. These are investor holdings. Look at Clover. This is for Clover Health, right? Again, this is our software. And this is all, one-time payment, lifetime access. You can get access to this right now, and you could search any stock you want. That's the power of our platform. Again, Bloomberg terminals cost $2,500 a month. It's $25,000 a year, and you don't own it. Ours, we give you a $1,200 coupon code, and it's a one-time payment around $2,800 one-time payment before we raise prices. Okay? And you get access to our community. So it's open access. With Bloomberg, it's closed access. You don't talk to anybody, which is a shame. So you can see now with investor holdings, you're getting investor holdings like you've never gotten in the history of Clover. You've never seen this many institutional folks holding Clover than ever. Even when it was $15, $16, you've never seen them hold this much. Right? What does that tell you? Okay. So what's happening right now is a lot of these institutions are going to be coming in doves because they know, they're like, well, if SoFi is turning online, Open is turning online, then Clover Health has to be next. And there's going to be some day traders out there that are smart. These people are not stupid. They're seeing it. You can see it here, how it jumped in popularity by 1,100%. It went from the top 632 to the top 75. Okay. So, I'm just letting you know, don't be surprised if, how do I say this? Especially with home humana subdomain and, how do I, I'm trying to give me my brain some time. Just give me a couple seconds. How do I say this? Okay. How do I say this? All right, listen, don't be surprised if you check your portfolio and you realize your whole life is changing before your eyes. Okay. Don't be surprised. I know it'll probably be your first time this happened to you. Again, I've seen it happen to me with AMD, Tesla, even Enphase when it went for free cash flow, and then the triple dragon. I literally was like, holy crap, my life is changing, right? It almost feels like your legs are about to buckle. You have this weird feeling like you're on a roller coaster, and you look at it and you realize that you can afford anything you want in the world, right? But you can't stop there, right? That's when you activate the wheel strategy, right? And that's when you start making $200,000 to $800,000 per month and buying properties, because that's how you legitimize the money. You wash the money into real estate. And what that'll do is it'll cause you to have generational wealth, right? And then if there is a recession, that's going to be good for you because then stocks will go down, right? But so will interest rates. And then you'll be, and essentially, hold on, sorry about that. Sorry about that. And then what's going to be happening is stocks will go down, interest rates will go down. And what ends up happening is you'll be able to refinance or do a HELOC and pull money out of your properties. And then you'll be able to buy those depressed recessionary stocks that have been down. And it's a rinse and repeat. Okay. Again, they don't teach us in school. And it's bullshit. Okay. All right. I'm trying to teach you to not have a boss. I'm trying to teach you to break out of the system. Okay. Corporate America is crap. They will work you until you're dry to the bone, until you're useless to them. Okay. And the people next to you that you are out working and working hard, they will go ahead and they will get a promotion because their family or they know someone works in the company. And you'll be, unfortunately, out promoted because of nepotism. Okay. The system is rigged. Okay. The system is rigged for people like me and you. Okay. And you gotta know and learn how to legitimize the money. Almost, you gotta wash it. You gotta clean the money. And how do you clean it? You clean it in real estate, because real estate is when the real estate is when the real money is. Okay. So what's happening right now, guys, is you have investors that are looking at chamath right now. If you look at online right now, everyone's like forgiving chamath in a way. And now the market is going to become irrational. And people are front loading this. You can see it right now, slowly start trickling up, right? Now we're at 1.07 million, right? And year to date, we're now down 1.57 when we used to be up 1.4 million. And we should be still down. We should not be this up right now. We should not be up right now. Why? Let me explain to you why we should not be up right now. Because look at healthcare. Healthcare is look at how healthcare is down 11% for Humana. Look at United. United is down 44%, right? Look at Molina. Molina is down 38%. Look at remind me, is Centene down? Yeah, Centene is down. Holy crap. Centene is down 54%, right? And then all of a sudden you have Clover now that is almost at break even for the full year. What is that telling me is that you're seeing people front running this because they're anticipating that the chamath SPACs are coming back online and the casino is turning back on. You understand this? So something did get announced after hours. Just a simple meeting with Canaccord Genuity. That's all. Okay. So the clown market's coming back. But for all the people that have joined Lifetime Access, you all now have a power in your hand. You have the power of the Al Stock Trades data. You will not fly blind. You have the power of the algo flow. You have the power of the quantum charts. You have the power of the financial data and analytics metrics chart. And you have the power of over 2.5 billion outputs of institutionally graded data. And most importantly, you have the power of multiple millionaires in the platform talking and strategizing, right? And you have the power of accessing what institutions are doing and seeing when they're selling and using math to get in their heads to figure out what they are doing. Okay. That is the power of intrinsic value. Okay. And that's what got me to becoming a multimillionaire. All right. So there's that. Okay. So we talked about this, about, how the market's frothy casino is reopening. It's game on. Right. So we have that. Right. And I appreciate you, James. And we have Al's brain. But here's the thing. Screw Al's brain. Guess what? I want to download my brain onto yours. Right. And that's the whole point of the course, right? Because we're a software platform, but we got to teach you how to use the software. Yeah. And I want you to be better than me. Right. I want you to be better, because if you're not better than me, then I've failed. Right. All right. So we talked about this here, about how Open can technically go from anywhere between $2.81 to $15, but there's going to be a heavy shitload of selling pressure in the upper range. Yeah. And I'm sorry for a 14-year-old. I'm sorry if this was mean. Again, I teach like the military, so sometimes I might be mean, but I do it for love. It's like tough love. If you can't handle it, then I'm not the right mentor for you, right? To put your entire net worth, that's very dangerous. Okay, be careful. Okay, so yeah, and then we have someone saying $80, $40, but the trading volume speaks otherwise. Again, guys, it's good to look at the good, and it's also good to look at the bad. Maybe I think because he had a hard time with trading, with 2022 and everything, so maybe that's an explanation. But I just would have been nice if he can just kind of put two, 3 lines here, and then I'm like, okay, that makes sense. Okay, that's fine. Again, it's just open dialogue. Okay. Now let's go ahead and look at algo flow. So if you look at algo flow for Open, let's see where Open could go. Again, algo flow normally costs, like Flow Algo is a company, they charge $100 a month. Guess what? You get this for lifetime access. Thank you to our tertiary party centers. Okay. So let's see what's going on with Open. So let's just give it a moment. Man, it's really taking time to. Wow. So I'll let that think. There it is. Yeah. So you can see there's a lot of data. That's why it took a while. Okay. So this is not good. All right. So you're seeing algo flow go up, but now you're seeing algo go down. And now you're seeing the stock price go down. So now let's stretch the algo now to 2 days. So let's look at the algo now for 2 days. Yeah, so we're seeing a downtrend here. Let's look at the algo now for just 1 day. Yeah, I mean, it depends. Could this rebound? It looks like it broke trend. So you can use technical analysis on the algo flow, right? You could use the simple moving average. You kind of draw a line here. It broke. So we could drop. Just be careful. Don't be exit liquidity. Okay. Don't be exit liquidity, man. Okay. Just don't get taken advantage of. Okay. All right. We already have so many bad things handed to us, and the rich don't care about us. Don't give them more. I mean, they already control so much of the wealth, guys. Okay. Don't let them give you, don't give them more. Okay. We're already at the bottom 50%, right? Obviously now I'm not, you know what I mean? Because of, and I'm trying to help you. I'm trying to show you how I did it. Right. And unfortunately you can see it takes a lot of data. You can't do this with just a piece of paper and pencil. You really, you need the data. I mean, if there was a way, I would have found this is it. Okay. All right. So let's go ahead now. Let's look at the shorts right now. Let's look at the shorts right now for open. So let's look at the past. Holy crap. Look at the past 7 days. So in the past 7 days, short volume, holy shit. Short volume went up by 39%. It used to be 19% last week. Again, guys, this is 7 days, guys. Look, 7 freaking days. 7 days ago. It used to be 19. Now it's 27% short interest. Again, guys, there's a big liquidity zone happening right now. And this, if retail investors push, if retail investors push, you're gonna get these shorts having to cover. But here's the problem with Opendoor, and this is what people don't see. If you go to, and again, it goes back to our data. If you go to our data, and if you type in open, okay, and if you get that data for open, if you go to institutional ownership, guys, and if you go to 25 years, look at the percentage here. I want you to look at the percentage. This is the percent ownership. Guys, institutions own around still 48% of Opendoor. So you know what they can do? They own 48% of Opendoor. So you know what they can do? They could just sell, and it's good for them to sell because they'll make money. They can sell their shares, and that'll give them an opportunity to cover, because then the price will drop. And then you see how they give themselves wiggle room from days to cover. Again, guys, these people learned a lot after GameStop. They're smarter than, right? The utilization is 91%. I mean, this thing has the power to squeeze, but again, you have folks that can offload their shares. You know what I mean? So you got to, again, guys, it's like it's like a, what's the word I'm looking for? It's like you're walking on a rope. You know what I mean? It's a balancing act, right? And these guys know how to balance. Let's look at this graph now and see what the hell the shorting is. So you could see the shorting is, yeah. I mean, you can literally look at the shorting here, guys. Where's the short data? 27%. 27%. Holy mackerel. Yeah, guys. I mean, just look at this increase. Yeah, this is pretty high, guys. All right, so I'm actually curious now. I'm curious what's Clover's. I'm really curious now. Yeah, so Clover in the past 7 days, let's see. So yeah, it went up a little bit and now it's slowly coming down. So they're decreasing Clover because, again, it's danger for Clover. It's dangerous because they can days to cover. They got 6 days here, so they don't have that much wiggle room. But with Clover is dangerous because Clover is about to become profitable, I think, in Q2. So there's that. Let's see. We talked about this. And now, okay, yeah. So now let's go ahead and zoom out. So now you see how we have our software. Let's go ahead and generate a report. This is like a hedge fund level style report. So let's go ahead and do that. Takes a couple seconds. We're going to go ahead and cancel. You can see, like, look, it just looks like Tesla. It just looks very sexy, guys. So this was generated July 21st. Let's go ahead and look at it. So it says here, the Monte Carlo is thinking $2.85. That's interesting, given that it has risen. The simulation shows a 95 percentile of maybe $5.83 though. So again, the base is 285. We're on a downtrend on the minute because of what happened right now with that 26 million volume of share of I think that was institutional selling. But the big one here is this is our AI again, guys. Any stock you want, you can run the analysis. You put any stock you want and it runs the analysis, and it does automatic support and resistance lines. Very powerful. All right, so we got 311, we got 461 here, 481 plus or minus was it rejection. So we got rejected heavy. So this is going to be a rejection right there. And I mean, it's about time to get rejected a little bit. So this is updating right now, but we got let's see, Clove right now. Sorry, open 321, so it's 328. So 331 is going to be the next level of resistance. If they can pass that, 374, 393, and that 464, then 481. These are key levels. What else? Now we're going to do Monte Carlo. Again, that 481 rejection. Again, technically 497, but $4.97, right? And then we got a balance off of that $3.17. So we'll see. Could this be a downward channel, or we could get a revision? You saw this huge jump, guys. And the goal now is to see, can this go to $5.48? And that's the 95 percentile of the Monte Carlo simulation. Now, let me show you something, guys. Let me show you something that you might not know. So let's go ahead and reload this so you guys can see this. Okay. So first off, let me show you this. Monte Carlo simulation. So what Monte Carlo does, it's a computational model. And what we do is, it's like Dr. Strange, okay? When he was trying to figure out how to save the world. It's a mathematical model sequence that runs a simulation many times. We run our simulations 25,000 times. And then we find the pathway that is most likely it's going to take. So if we do that, let's say we do open. And then let's say we want to look at the day. Let's say maybe the hour. And we want to do an analysis. We run the Monte Carlo. You see the Monte Carlo there? You see how you see how this Monte Carlo? See those? Let me show you. You see these? You see these little squiggly lines here? You see these little squiggles? Those are how many squiggles? Those are about there's 5,000 squiggles. I don't show all of them because they'll slow the computer down. But if you click on this, you'll see 5,000 simulations that are being run. See, this is, again, guys, what I'm giving you is what hedge funds have. This is 5,000 simulations at the finger of your tips, right? At the tips of your fingers. A little dyslexic there, huh? At the fingers of your tips. What the frick? Okay. And then we have B-Rob saying 330. So let's see what's going on now. Let's see. Oh, yeah, there it is. 1.08 million. So we're getting there, guys. We're getting there. Again, money's tracking, guys. Money's tracking. They're seeing the pattern, and money's tracking again, okay? All right, let me go ahead now and let me figure this out. All right, so then Monte Carlo here, mean final is $4. This is for open. $4.18. A standard deviation of 1.34. We got the most likely outcome is 369. That's the mode. So we have the bull case, base case, and bear case. Bear case is 238. Best case is 396. And the bull case is 673. So $6.73. And this is for utilizing the simulations for open. Beautifully, though, if you look at this, the price target, you can see we passed the analyst price target. Now, what I want to do is let's just kind of restart this. Let's reset it all, and let's kind of let's reload the page. Okay, let's reload. And you, again, guys, you can get access to this right now and run these simulations yourself and know mathematically when is a good time to get in and get out. And on top of it, from an educational perspective, learn exactly what institutions are selling. Okay. Right. And the beautiful part is you're learning from someone who's already a multimillionaire. It's not like you're learning from someone who hasn't been there. Right. You gotta go to people that have done what you're trying to accomplish. Right. So, let me go ahead now and let me do the advanced Monte Carlo. Let's do the Monte Carlo all. This runs, you see the little squiggly line? This runs 25,000 simulations. And here's the 25. You click on this button and look what it says. Look what it says. Due to the exceptional high computational intensity required to render 25,000 simulations results, the full table view has been disabled to prevent potential performance issues. Please refer to the summary statistics provided for your analysis. Pretty much in layman's terms, it'll tell you your computer is about to blow up because your computer can't handle 25,000 simulations. So it's there to protect your computer. So right? So that's all it is. And we absorb the burden. So it's actually, this has become better. And so you can use this on your phone, right? But it's because that's why this lifetime access will get expensive and it will go up to 10 to 15, 20 because we absorb that computational burden in our cloud system. So it's unfortunate, right? But it is what it is. This is what the hedge funds use. So we got to use it too. So if you look at this right now and look at the overall bear case, base case, and bull case, given that there's a lot of excitement now for Opendoor, we can look at the bull case. So the bull case goes like such. I'm going to take a screenshot because there's a lot of folks that watch our channel that are 60 years old. And I care for you guys. I'm just going to put this here for you, okay? So you guys can see. Let's zoom in. So given that we're in the bull case, we'll talk about that because everyone's like bullish right now. So the lowest price is $2.98. Next is $3.81. Again, these are simulations. And for their simulations at different time frames. Simulations at different time frames. Again, 25,000 of these lines, just like we talked about here, right, with the Monte Carlo simulation. By doing that, you get, let me actually, it's fine. Minute, hour, daily, weekly, all time, right? So this is kind of how it works from the top. So on the minute chart, first let me just take a screenshot for myself so I remember the time frames because I haven't slept, guys. I'm tired. So okay, so from the minute chart, and this is a live, right? I'm not reading off a script. This is just, again, I've been doing this for a long time. I'm just speaking freely. Okay. So on the minute chart, it's $3.81. So that's an 18% up to what it's at right now. $6.76. That's in the hourly chart, and that's 110%. So if you run the simulation 5,000 times each, this is what you get, right? So 25,000 in total. The daily chart is showing $5.90. The weekly chart is showing $2.98. And the all-time chart is showing $5.83. Now, we could go ahead and just for, shits and giggles, we can put it in here and say, hey, man, I would really like you to go ahead and see the numbers. I want you to take the average and show me what the price is going to be. So we could take the average of all these numbers, and I could do it right now on paper, but let's just do the average here. So we add all these. So the average is $5.06. Okay. So the average Monte Carlo based off of how the stock is increasing is $5.06. Okay. Now what's interesting, and you got to be careful here. You see how it's $5.06, and right on that minute chart, you got that next that $5. You started getting selling volume. It's almost like the algo started to come online. So again, guys, just be careful with this. Okay, you got to use this type of data. Okay. And we did this analysis, and that's it, guys. So for folks out there that want access to all the tools we use, and we have so much more. I cannot show you all the tools, because it'll be like a 5-6 hour live, right? The beautiful part is it's open access, which means once you are in our lifetime access cohort, you talk to all the members and you use the software together and showcase your findings. Like, you know how like Mayo Clinic's built, Henry Plummer built and designed Mayo Clinic, and he had about 5-6 floors of a building, and the building was integrated to where the cardiologist can speak to the nephrologist, right? So that's what I built, right? I built a platform where everyone can speak together. And it's the same thing as like going to Mar-a-Lago, right? And yes, we have beautiful, Huzaifa. Huzaifa. You became a lifetime access member yesterday. Welcome to the family. As you've seen, you probably have seen your phone go off like crazy. You probably are getting 500 to 1,000 notifications on the data. It's fine. You're going to find the ones that are important for your needs. We help day traders, swing traders, and long-term investors. Again, it's 2.5 billion outputs of institutionally graded data. So I think now, given that we've expanded to multiple stock markets, I think now we're probably above 5 billion outputs of institutionally graded, which is insane, right? But the thing is, if you want a place to where you'll be surrounded by millionaires, regardless if you're a new investor or a seasoned investor, this is the platform. We have institutional access, which is, hedge funds coming in and using our data. We're having hedge funds come online. Obviously, they have a different payment method if they're using it for their institution, right? But the point is you have a place out there that is not bullshit. There is no bullshit here. It's all math. It's all data, right? It's not as simple as stock go up equals good, stock go down equals bad. It's much more than that, guys. It goes much, much more deeper. But the beautiful part is I've broken it down to where you don't have to do any of the math. The math is done automatically. It even calculates when the freaking free cash flow turns positive for you through the AI summary. You do enhanced AI and it does all the calculations for you. And there's something called Generate Insights where you click on this button for an add-on and it'll call. Let me show you this. This is actually pretty cool. So if you go ahead and open up the AI version of this, and let's say if you type in, let's do open. You do open. You do enhanced AI analysis. This for the add-on purpose. You hit Generate Insights. It says synthesizing strategic financial intelligence. So what it does is it takes in over 3,000 to 5,000, 10,000 pages of Security and Exchange Commission's data from the government. And it takes all that data and then it basically analyzes it and it gives you insights like you've never seen before. And it analyzes it and it does all these computational mathematical models for both the annual and also the quarterly. And once it basically conglomerates all of that information, it goes ahead and gives you the data and it presents it to you in a generative form. So you'll see it right now as it's analyzed. You can see, and there it is. Comprehensive financial analysis of the Opendoor. Let me just kind of zoom it in here so you can see. And it goes ahead and it gives it to you automatically. And it shows you the positive. This is the growth. It shows you the negative, sharp decline in 2023 from macroeconomic headwinds. It shows you why. It tells you why. Strong free cash flow in 2023, why? And it tells you recommendations. It gives you all of this information in real time at the point of contact. At the point of contact. Okay? So right? So there it is, right? And this is the power of the Al Stock Trades platform, right? This is a no BS data analog to take you from zero to hero. And don't take it from me. Take it from the people that have become multimillionaires in our platform, right? Let me go ahead and show you the article here, right? So CEO Albert Allen's Al Stock Trades achieves milestone user report, total net worth growth exceeding $45 million, right? And here's one of them right here for you. Here's one of the $1 million there for you. You understand what I'm saying? We want to be the mecca of retail investors. And we want to show you that there's a better way. No bullshit. Okay? Right? It's great stuff. Just need to keep learning so I really know what I'm looking at. But happy to be here. And guess what? Soon we're going to be able to showcase and have live meetings. And once I'm done with residency, I'll be able to come online with you guys and do market opens. So I'm just kissing my dog. He's a freaking angel, man. He's a freaking. If hedge funds had a heart of a dog, we wouldn't have pump and dumps like this. You know what I mean? We wouldn't have institutional selling if we had hedge funds that have the heart of my beautiful freaking dog. I love my dog, dude. I fucking love my dog, dude. I love this dog. Okay, sorry. He's literally holding Michelle and I. He just came to me and kissed me. Like, just like, what a freaking angel. So the point is regardless where you are in life, we're going to go ahead and once I'm done with the whole residency aspect of things, we're going to go ahead and do internal lives where we're going to be meeting together, especially during recessions when there's opportunities. Likewise, we're going to do the covered calls and cash secured puts and find opportunities where we can make $200,000 to $600,000 to $800,000 per month. Okay. So that's the power where we're at. Okay. And we can ultimately, let me see if I can pull it up here real quick. Give me a moment here. Let me see if I can get to this here. One moment. Trade options. Let's just open up trade options here. And let's say sell a call. Well, that's weird. It's not showing me on the calls right now. Maybe because the market's closed or something. That's usually it shows me, guys. It's kind of weird here. Here, give me a moment. Let me see. Maybe I need a reload. Hold on. Let me see if I can reload. Give me. Because, sometimes I don't know. Let me see. I just need a. All right. There it is, guys. Sorry. There it is. All right. Here it is. I don't know. I just had to reload it. It was kind of weird. All right. That's fine. So let's do a covered call. And that's in 4 days. So let's do a covered call in a week, maybe next week. Let's do next week. Okay. So let's do, if I wanted to do covered calls now, I will not do a covered call now. Why? Because I know the intrinsic value. I know the numbers. It's stupid to do a covered call right now. It's undervalued. But let's assume I want to do a covered call right now. And let's say I want to do it at 350. So we got about 330,000 shares here divided by 100. That's about 3,300 contracts. So right now, in about around, and that's literally at $3.50, right? So that's about $26,000 every 2 weeks. So 26,000 every 2 weeks times 2 is about $52,000 a month. So as of right now, that's 52 grand a month I can make on covered calls, right? And then let's say it goes in the money. Okay, that's fine. Then I can go ahead and I can do a cash secured put, right? So then I could go ahead and do a cash secured put at whatever this level is, right? And it just keeps going back and forth, right? But you see what I'm saying? That's about 50. What do we say? That's $52,000 every 2 weeks. And now let's see if we could do a month out. Let's do 25 days. So we could do that. Let's see. This is like 30 days technically. 30 days. We got 21 cents here. Yeah, that's fine. Let's do 25 days, right? So you do 25 days. So every month, every 25 days, covered call, that's $65,000 a month I can make. But that's not, that's not what I want more. Because I'm greedy, right? I want more than that, right? Because I know the intrinsic value. I know what Clover's worth. I know Clover's going to be worth more. But you can see at today's level, I can make 65K, okay, a month. But you know what I want to do? I want to make 300 to 800K per month, because then I can buy properties. I want to make 1.2 to 1.5 million per month. Okay. So again, guys, this is the power of the platform. Okay. You want to learn how to do this? You want to break out of the matrix? You want to become a millionaire? You want to be surrounded by millionaires? You want to break free? You want to be able to tell your boss to go fuck off? Join our platform. Okay. That's all I have to say. God bless you all. And let's rock and roll.